Hey guys. It's Gashara Bashehi. I am here looking at the markets very early in the morning. It's the 22nd of June 2023. And what I'm looking at currently is the gold stroke the US dollar, the gold spot stroke the US dollar. I am here, maybe looking at my charts. I've been studying the smart money concepts for quite some time now, and I have for almost a month, and I've been trading, but gold has been in a very massive consolidation, and I wouldn't want to subject you guys or even my own capital losing money somewhere around here. What I actually did was I've been waiting for the market to break these lows around here. So once it breaks these lows, we already know that we're going to push even far more down. Or if it have broken up here, we already know that the market will be flying to the upside. The market chose to broke to the downside, and I've been studying smart money concepts. And hey, let me teach you guys how to apply smart money concepts. So the first thing will be the definition of knowing what are smart money concepts. One of the best areas, I'm not marketing for them, but one of the best websites to learn anything and everything Forex is on Investopedia and babypips.com. Again, guys, I'm not marketing for them, but that's where most people, and I would advise most beginner and even at intermediate and advanced forex traders to actually learn from everything forex. They'll shed some good light over the same. Smart money concepts is the capital that is being controlled by institutional investors, market mavens, central bank funds, and other financial professionals. Smart money was originally a gambling term that was referred to the wagers made by gamblers with a track record of success. So we are talking about three things, guys. People who are experienced, people who already have an inside knowledge into the market, and they already know what's going to happen next. So they are the ones who came up with the term smart money. So I'll show you maybe something like this. So at this region, in a daily time frame, at this region, everyone knew that the market is going to shoot up. Yeah, and it actually even did break a structure up here, and we even had a market gap there. But if an entire month the market was shooting down and down and down, it means that there was large volume. It was not only retail trading, it means institutions and hedge funds and other market funds and the market mavens meaning an expert, yeah, over something. So the market or the market experts knew that this market wanted to go down, and that's why they put huge volume over the same. So here, this was a really big mess. Just like same as this point. Let me mark these areas where we had consolidation in the markets. I usually do in my gray zones. So that was an area where we didn't have any movement at all. Yeah. So this is also another area where the market didn't move at all. This was just purely retail trading, and there was no much to experienced traders, to pro traders. They already know that there was no much money in gold as we are used to gold, moving some few pips and boom, already making some money in the market. So I'll be jumping into my daily time frame. I'm already in my daily time frame. I'll be jumping into my 4-hour time frame so that I can shed something on you guys about smart money concepts. Let me scroll this down here. So on smart money concepts, we are already having something like this. These are consolidation, no general movement. This is what we call a sideways trend, and then the market per se broke the support. It didn't break its resistance up here, but it broke its support, and we're expecting some retest. It might just have retested on our daily time frame. considering yesterday's candle touched on to our support region, and we might be, if we already show some market movement to the downside, that's just basic price action. We already know that the market will move to the downside. These are not the best of candles move to the downside, but you already see that the day before yesterday we really pushed to the downside, and we really pushed hard so that we can manage to break these support levels and out of the consolidation. So smart money concepts applies here, guys. So backtesting and seeing what traders were thinking about, and even the experts, the market mavens were really doing with this market, gold. It had a very special area around 1954.9, which is, let me just say it's 1955. You can actually even change this. Let me edit this to 1955. So it was a special area. So it's already at 1955, guys. So it's already a special area where the market really respected for quite some long time. We're talking since May 18th. We've been tapping into this area so many times, guys. So after the market broke below this support, we actually noticed after market broken has if the market's below 1955, the market would retest it and actually create another low somewhere around here. So it's around almost close to 1940. Yeah, I can clearly see it's around 1940. So we've been playing around 1940 as our support or as our demand zone before the market pushes above 1955 again. It will retest, break a structure, retest it again. These are the buy side liquidities before the market push up, and then the market will be rejected on the over this resistance zone. We can mark it above here. So this is just it's just understanding the consolidation movement. So we never did go above these areas, guys. So we pushed above this. No, we pushed above 1955 up to 1985 region, and we get rejected, and then we push below it, and then we've been playing these as our midline. Our 1955 as our midline. So the first time that the market really showed any movement, this was just retail trading, the market just playing in between these two levels. The market showed good momentum once it failed. Once the market failed to break this resistance up here, but it broke 1940. You guys can see 1940s down here. So once the market broke into 1940, the market said that it was going to retest again. So market pushed below 1940, breaking a massive structure. So this was a, let me say this was a break of structure. Let me increase the size to 20. So this was a breakout structure, a clear breakout structure of that support, guys. So the market pushed back up to this resistance level where orders were being taken. Remember, guys, that after the market was still had a demand area or a support area around 1940, the market actually collected some orders. We can see these and we can actually label them as a pull. Yeah, we can see that this is like a pool where orders were being taken from this area, guys. Let me adjust this a little bit. So it's a pool where the market used to tap into, not go above. We can call it our supply zone, but it was also our sell side liquidity. So now these are the smart money concepts. So I'll use my sell side liquidity somewhere around there. I would label this as my sell side liquidity. Why? Because the market really did tap into these figures somewhere around here, collected so many orders before the market got really market got momentum to break below this area and have this massive breakout structure. So was this a fake? I would say no. But once the market hit 1925, below around 1925 here, the market pushed back into a sell side liquidity after breaking a massive structure, and then the market got weak again. Now this is our trading area. If we didn't grab it at this area, yeah, we're not knowing that if the market's going to break around 1940, but it broke 1940 and actually shot up, disrespecting our order block right here, but coming back to our sell side liquidity. And it means that there were more market havens, there were institutions, there were central banks who are willing to sell gold but could not sell gold at lower prices, so they put their orders up here. And that's how the market actually went for those big orders before shooting to the downside. So now we already now passed this support again. Yeah, this support has already been broken, as you guys can see right here. The market actually broke this support again, retested it yesterday, shot down. We had some good rejection down here, and this is maybe not the best of the best downtrend. According to candlestick patterns, you can see the healthiness of those candlestick patterns, but I still believe that we are pushing downwards and downwards and downwards, guys. So that's my 4 hour time frame, and I can already see where the pool was and where the big these guys, the central bank funds, the institutional investors who went in with a load of money. Yeah, so we are currently here. So now let me jump into my 1 hour time frame using the same concept, guys. So we can already see that this market is not breaking any structure to the upside. We already have a something like that there, and we had a clear breakout structure to the downside. Even though market came back up, it means that we already have we're already collecting some orders around here. This is almost like another pole somewhere around there, and we are already pushing to the downside. You can see how these candles were playing about, retested this gray area, which we can see where we had our massive breakout structure. It acted as our support, and we broke to the downside. Then we came back for a good retest over the same area. So what we're targeting right now, considering that we even have candlestick patterns that are already showing us that we in a downtrend, we already have an evening star on my 1 hour time frame. We already have a bearish engulfing on my 4 hour time frame, and even maybe now to lower time frames. So you already have an evening star. We're already breaking like a small pennant somewhere around there. So I would want my stop loss above this week. Let me delete this now. I would want my stop loss above this week, because this is where the market is collecting some more orders top side, yeah, before it broke structure, yeah, collected some monies top side. So, and now we'll be pushing to the downside, hopefully. So this is where I would take my, and it's 7:37 a.m. Are we still in the Asian session, guys? We're not yet even to our Frankfurt session, and mostly I do usually trade at 10 a.m. GMT plus 3. That would be the time London session in East Africa will be on. So I'll be taking this trade for maybe a scalping perspective. So we already had a push to downside, and you're already showing some good momentum to the downside. So take my short position if it's a market execution somewhere around there. Then I would want my stop loss to be, again, guys, remember I'll use a straight line. If the market breaks above, let me thicken this and let me put it as green. If the market goes above that green area, I would expect not to be selling the market anymore. I'd actually look at my price action again and my smart money concepts just to see if the market is changing by any chance. So this is where I would want my stop loss to be, and I would be pushing to the lowest area where the lowest area where the market actually moved to. So this this is a risk to reward ratio 2.2. It's not that bad. Yeah, with a safe stop loss just above where some liquidity was taken. Unless we have some fundamentals that the market will push to these areas up here, but not actually. We usually do use a lot of things to see in the market so that we can know that where the market is going. So I choose to take this trade now. I'm actually executing this trade as we speak. Why? Because I'm looking at my fundamentals, guys. So we don't have any other fundamentals until we don't have any impactful news until 2 p.m. GMT 3, where we have our Bank of England interest rate decision. So I'll be jumping into my trades right now, as you can see, guys, and then yeah, bye guys.